Wall Street Journal is saying home price growth slows under tide of rising mortgage rates. But how true is this, right? Today, we're gonna go over the stats provided by our Metro MLS, and we're gonna see what exactly is it saying of our market. We're gonna go over median sales price, percent of original list price received, month supply of inventory, and I also want to touch on affordability in Milwaukee, what I'm seeing in the market, everything that's going on from the deals that I have right now, and maybe what to expect in the upcoming months. My name is Luis, and I am a real estate advisor. Right, so here we go. Median sales price. It increased by 8% in the month of October of 2022 compared to 2021, right? That means that it increased by 21,500 since this time last year, right? So despite everything that's kind of going on, we're still seeing the median sales price increase compared to last year, even though interest rates are different, right, from a year ago. Percent of original list price received, right? Around it basically didn't change. Sellers are still receiving about 99.1% of what they're asking for or what the list price is, right? And that has not changed since this time around last year. You could even see it in the graph, right? The exact same. The month supply of inventory has changed. If we look at the graph, right, it increased from 2.0, right, 2 months of supply, it increased to 2.2, right? And if we look at the other graph, it shows that, you know, it's the most that we have seen all year, right? It increased by 10.2%. Even though it might be a 0.2 increase, right, that's still a 10.2% increase in months of supply. So now we might start seeing a little bit more months of supply down the line. Next, I want to touch on affordability in Milwaukee. So although the prices are dramatically increasing, what does it say about affordability in Milwaukee? Right, according to Black Knight, right, let's look at the graph. Milwaukee ranked 9th in the country for most affordable markets, right? 9th in the country. And based on the median income, it shows that 27% of your income goes to housing. Compared to a market where, as we see right here, as Miami, where 51.9% of your income goes to housing, right? That's a dramatic jump, right? So this could be a great city for young investors to start their investing journey in a more affordable market. Now, I want to touch on what it is that I am seeing in the market for my deals, right? So on the listing side, I am seeing deals take longer to close, and buyers or lenders are working, or they have to be a little bit more strategic and are spending more time trying to figure out how to get financing due to the changing mortgage market. For example, what I've been seeing is that certain deals, the lenders are coming to me saying that the buyer needs to apply for grants or certain grants, or they're trying different grants out, right? Based on whatever criteria that it is that they're looking for, the deals or the terms of the deal might have to change, right, throughout the longevity of the contract. Again, and because there's so many changes going on, sellers are going to start getting frustrated because it wasn't what it was originally proposed. But what I also am seeing is that sellers are cooperating more with buyers because at the end of the day, sellers still want to close, right? And they don't want to prolong the process, especially with how volatile the market is right now with the interest rates. Those same buyers may not be able to close on that same property, let's say in a month or 2 months from now. So what I am going to start seeing is that sellers are going to be cooperating more with buyers for the sake of closing at the prices that it is that they're asking for. Deals are taking longer to close, right? But that's now going to be expected. It's not going to be a 28-day close with no contingencies. We're going to start seeing more contingencies. And now what to expect in the upcoming months is a time of the year where the median sales price is going to start falling, not compared to last year around this time, right? But it's going to start falling from what we saw like in the previous month. And that's just because it is the slow time of the month. You can see in the graph right here how around this time prices start to fall, and then we're going to start seeing another increase. But that could change now with the interest rate increasing so dramatically in the past few months. So there you have it. If you have any questions on the market or any specific small local market, you can give me a call or head over to my website, 773-454-7617.